Welcome to Trading Lounge and the Commodity Futures Report for Monday 10th of January. Just starting with iron ore here, starting with iron ore, and then we'll look at gold, crude, copper, nickel, gas, dollar index. So the Chinese iron ore futures market here. The reason I'm showing this for is because the move up through here, I can't seem to count it as corrective or impulsive at this stage, but I just thought it was interesting looking at the monthly chart here and seeing this so low here. So one way or another, we should see sort of it continue to flick up. The move down through here, it looks quite impulsive, doesn't it? But I know that the first move down through here is corrective. So let's cruise into the daily chart here. Don't need all of that. So yeah, this first move down through here is in 3 waves, so it's corrective, which one way or another makes whatever occurs in this space also corrective, and eventually will make new highs above here. I do see the commodities. We'll be taking a longer term view of crude and copper and so on again today as well, because I think there is a massive long-term trend to the upside. I know that's pretty hard to sort of grasp, but I also need to point out too that it is the commodity cycle in super cycles is the last one to top out. So yeah, so this little move up through here, I can count it being corrective or impulsive. I have to say it's looking quite nice as an impulsive wave, so we'll look further to the upside for this, but it's just not confirmed yet. I have spent a little bit more time on the tick chart here just to 100 ticks. Okay, it's just a bit sleepy. Monday morning, a bit difficult for all of us. It was jumping around. It's been doing a few weird things this morning. Look, I won't worry about it. The platform's sort of not sure what it's doing, but yeah, I was going to go to the tick chart and look at that, but it's just not giving me that. Something weird is going on here. It's obviously thinking and doing something. But let's not worry about that too much. Let's cruise on to US spot gold. So this is the weekly chart for US spot gold. As you know, we're looking at a triangle pattern. So wave A, B, C, D, and E. And in each of these legs, we're looking for 3 waves. And each leg is diminishing as well, like a triangle should. So we're looking here for an A and a B and a C down. I was thinking the 1700, 1720, that sort of area for this wave 4 here. And once that's completed, we'll look for wave 5 to the upside. With all of this as well, really this is all a pattern that concerns the 2000, which I just call major trading level 2. So I see this as the arrival, the corrective reaction, then an impulse wave for the first high above the level, and then an ABC correction before we see any further upside here. And the basic pattern is this one here. So it's just a market, how it migrates from being resistance to support. So it reacts from the arrival, the reaction. So we're in the final stages of this, and then we'll see an impulse wave. And it's very common for this to be the 3rd wave, 4th wave, and 5th wave. Not just at this degree of structure that we're in at the moment of intermediate and primary degree, but also, you know, at much smaller degrees of Elliott and the trading levels as well. So the trading levels is also fractal, using the Fibonacci sequence as a price ratio. So yeah, look, I see that once we get this 5 waves up here, then we'll have a larger ABC correction before finding support and moving further up in all of this. So let's just cruise into the daily chart. But I've been using the 2-day chart. Nothing special about the 2-day chart. By the way, it just gives me a clean palette to work off. So the A, B, C, and we start to see the 3 waves in each leg here. So we've got the A wave, the B wave, and we're looking for the C wave. So this C wave here, I'm looking for it to be in 5 waves and down into the 1720 sort of area. But picking targets, you know, it's like sticking a flag in the sand. We're far better off counting the actual structure as it goes down through here. So I think I've been working on the tick charts, so I will go straight to that and pick it up from the B wave top there, or was it the hourly chart? But either way, we'll just go in and have a little look. Now this will do the trick. Let me get in a bit more data here. So we've got our B wave top there. So I may not have this right or wrong, but this is kind of what I'm thinking so far. So from wave B, we're looking for 5 waves down for wave C of E here. And while this is pushing down, we can expect the US dollar index to push up. I will bring either 10-year notes or yields into this as well, into this commodity video at some point in the near future. But as it stands, I'm just looking at this as 1 and 2 here, and then 1 and 2 here, and 3, 4, 5 for third, fourth, fifth. So something like this here. I will be adjusting it as always, of course, because it looks nice and neat here, but you know, once it actually happens, it will look like that I was drunk when I walked home from the pub last night. So yeah, anyway, but that's the thing. One of the other main points here is that the group 1 above and group 2 below here, that's the swing range for the market working this large number, because it's the closest largest number. So we will see lots of support within here, but our first step really is to see, you know, this was some type of support here, and now it's possibly the resistance here. How far that goes up there, I don't know, because we could probably count this different too. We could count this as 1, 2, 3, 4 and 5 to here as wave 1, and then wave 2, and then wave 3, 4, 5. So there's a few things that go on here, but with the wave count and understanding the levels here, yeah, so that's how we'll work through all of that. Let me bring my thing back up. So crude oil is next. Crude oil. So this is the monthly chart, and also, you know, we've come out of a triangle here as well with all of this. So from wave 3 to wave 4 here. Now, it looks a little bit odd to be a triangle, but when you start looking around the planet at other ETFs and stocks and so on in this area, there's better looking triangles than this out there. But yeah, I mean, as it stands, this is in 3 waves, that's in 3 waves, this is in 3 waves. There's an A and I could count that differently, but 1, 2, 3, 4, 5 here, a bit difficult more to see in here. But the main takeaway here is that like copper and other commodities, we do have an impulse wave here. So because we've got an impulse wave here, that means that after a correction, we'll get another impulse wave. So yeah, fill up your gas tanks. So from that, we'll just go straight to the daily chart and looking at that 5th wave for wave 1 up there, and looking at an A and a B and a C wave here. So we've been in the A, the B and the C wave here. We may have a top in, or there may be one more little move to the upside. Let's go in and just check on the tick chart. So pick it up at that wave B there. Let's see, need more data. Need even more data. Let's just so I've got this counted a bit differently there on this one. Don't worry, it's only a tick chart. The tick chart's my working chart, so not to pay too much attention to my mess here. But this move up through here, the thing about this is that you can kind of see that it's in 3 waves with an A and a B and 1, 2, 3, 4, 5. So because this is corrective, it makes whatever happens in here part of that correction. So wave A here, A, B, C for the B wave, and then we've been counting this up. Now this wave 1 here, I think this could also go back down here as well, but it doesn't matter. Still leaves us with wave 4 here, and then how do we look at this to the upside here? So let me just double check that there for a moment. 1 and 2 and 3 4, 1, 2, 3, 4, 5. Yeah, 1 and 2 here, and 1 and 2 here. And 1, 2, 3, 4, 5 for third, ABC for the fourth, 1, 2, 3, 4, 5 for third here. So I'm thinking one more move here, but we may have a top in. I may have this totally wrong here. We don't want the $78 here. This is a CFD chart, so that breaks it down into decimals. But the 78 here, we don't really want that to be. If that becomes the retested resistance, then it's likely that we've got a top in. But let's just see if we get a little 5 waves to push up through there, and then we can also look to start getting into short trades coming down this side over here. We'll build in. We'll just put baby positions in there, and we'll just anyway, we'll get to that in due course. So that's oil. Let's have a look at copper. We're using the high grade US copper for this, but the LME copper's got the same. It's got the same pattern. So this is a monthly chart here as well, with an A, B, C, D, E here, and then looking up for wave 1. Now I probably need to change these from intermediate to primary degree structure, and I'm also scratching my head if we've got wave 1 here or wave 1 over here primary degree, because I can count 5 waves up here on this. So if I just go to the week, I still need to do more work on this, but or is it the weekly chart? Let me just check. Weekly, yeah. So here I can see I've got 1, 2, 3, 4, 5. A bit hard to see. Then here, then 1 and 2 and 3 and 4 and 5 for third, fourth, and fifth here. But if I've got the 5th wave here of wave 1 here, then it's a little bit tricky to figure out wave 2, because it's just not a typical wave 2. I'd have to, if I put wave 2 here, I'd have to have it as a WXY at that point. So I'll put that, just change that straight away to a Y there, as a WXY to that particular point in time, or we get 5 waves down into this point here first, but that's possible to get that down there too when you think about crude oil and that as well. So we need to be a little bit careful here, but we're also looking at this as a wave 3 and 4 triangle pattern in here just to make things worse, but I'm getting there with it. So this is the daily chart we worked off, and I've had this as a wave 3 over here for this. And yeah, so for this here, I've been looking at a triangle pattern as wave A here, wave B here, WXY for the C here, and then an A and a B and a C here for wave D, and then down for wave E here. So this little move in here appears to be corrective, so we should be pushing up there. So let's just continue with that journey for the time being, and probably on the tick chart here as well. Let's just bring in some more data. Okay, that's plenty. So yeah, a WXY, because we've got 3 waves there, so we have to do that. And in this case here, I can still go with an A wave and a B wave, and 1, 2, 3, 4, 5 here for wave C of A here in blue, and need a B wave over here. I don't know where that went to. He ran off, didn't get paid enough. So yeah, definitely corrective here in this space. A nice little B wave here. So I think that's all okay there for that B wave. And then we're looking for 5 waves up here. I haven't really pulled this apart just yet, so I won't worry about that until it starts to stretch its legs a little bit up in yonder here. In terms of actually being bullish and trading long, well, we could do that if we get support on this number here. 5 is the 4 means diddly squat, but the 5, if that becomes a classic trading levels pattern here, well, then we'll look at that long trade setup in there. But otherwise, we'll expect to come down here in 3 waves or 5 waves. So a bit more to go within all of this. But anyway, I thought we'd be there after Christmas, but we're not there. We're not there yet. So yeah, look, it's pretty sort of complicated in that regard. and this will push down probably when the US dollar index comes into play. So let's look at nickel next. I've got nickel on this platform now, not the other one. Nickel, this is weekly. And Raphael from Italy sent me an email, which I haven't had time to read yet, and he's probably right, as this is a leading diagonal triangle for wave 1 up here, because he's 3 waves here and 3 waves there. So I'll need to check on that. Thanks, Raphael, for that. And I'll when I've got time, probably on the weekend, have a look at that. But apart from that, we've counted 5 waves up here. So like I said, I was pretty excited about this chart because we've got 1 and 2 here, and 1 and 2 and 1 and 2 and 1 and 2. So we could really sort of move off here for all of this. I've got the 1 hour there, so I've probably got on the 1 hour chart, but I'll also check the tick chart as well, I think. But yeah, I mean, the main point here really is that if you're going to go into an ETF for this, which I also let me just check here for this. Oh, this was the copper fund as well. Yes, I need to thank Attitude928 on YouTube for helping me out with finding the ETFs for a lot of these. So I've made a bit of an effort and started. So this is the copper one here, because obviously if you're going in for the long-term trend, we don't want to be trading, leverage is fine, but it's just a bit safer for us retailers to trade non-leverage and stay in the trend. So one of the things here was this particular one here, this ETF. I think it's traded on Amex, I'm not sure, or New York, but that's the code. And once again, we're looking for, this is the same sort of pattern as copper, so we're not quite there yet, but when we get here with this, then we'll put a long trade out on this. And yeah, there was the one for the nickel as well. I won't go into it today for the ETF, but we're looking for ETFs so we can get into these for longer term trades. Okay, so that's a takeaway. Let me just check on the hourly chart. Okay, so just on the hourly chart here, we're counting 5 waves up here. That was all good. And then we're looking here at 1 and 2 and 3 and little ABC for 4 here and going up for 5. So we're not there, we're not ready yet on this hourly chart, but we want that pullback for wave 2, and then we can look to move in. We want to have some safe entries, and really, realistically, this move up here is in 3 waves, so it can be corrective, but I can see that that's corrective as well, so we'll make a new high. But have I got this on the tick chart? No, but that's all good too. Let me just clean this up. So we don't need that. I like working on the tick chart. It's just a little bit. You can see a nice third wave here, so that's really good. So 1, 2, 3, wave 4, pretty clear on wave 4, and what we're looking for is wave 5, and then we'll look for our little ABC pattern. So I'll start to dress this up now. 500, so we can put in the minor level. Well, let's just do this. This is the major level 2 here. So we'll just pop that in so we've got some reference. And that's our major level. And then, so we've got major levels, then the next degree down is medium levels, but there's no medium level in the vicinity here. So then we go down to minor levels. So we've got minor level here. So this 21 here is part of the first minor level. The second minor level is at 22, and then the third minor level here, is at 23. Now this one's important because this is the top of group 1. If we get a tested support on top of number 3, then we know that we're leaving this here. But obviously in this case, looking at the tick chart, that's, it's the other side of the black stump, so it's miles away. But between 20 and 21 and 21 and 22, we can go into the sub-levels. So the sub-levels, which will help us. So once again, we've got 1, 2 and 3 here, which make up subgroup 1. And then we got 5. So 1, 2, 3, 5 and 8. So when we talk about 8 here, we can also talk about group 2. So group 2 is 65. So that would be 650 in there. Can't get it spot on. That's to do for the meantime. And then we've got 72 in here. So we'll put that in here. So these are sub-levels. So really it's just breaking down the problem. So what we're looking for here, that looks like 1, 2, 3. I'll check on that later. But what we're looking for is, we'll get into that a bit more. We're looking for a nice move up here that may take us to the 21. We'll see. Probably will. And then we'll be looking for our ABC pattern here, pulling back 50 or 60%, but probably just to the wave 4 here. So, but let's just assume that that's there, and that takes us back to that 61. So that's going to be about right, and that's going to fit nicely in there. So what we need to do is we need to pick this up on the ETF. We need to find the ETF. I think that it was given to me by Attitude 928, so I've got to check on that. I just want to get this right before I go. So that's on the 50 there. I mean, these trends that I'm talking about, and this is the first one to go, nickel's the first one to go. I mean, these are sort of trends that, going into this third wave, if it's there, the sort of things that can pay off your car and your house and clear your debt, because you only need that one trade a year. And this could be the little darling we're looking for. Okay, so I'm just going to label this wave 1 here. So tomorrow or next day, soon, I'll be looking at this in the ETF, in an ETF. Not that I like ETFs, by the way, but just check on that. Because the trouble with ETFs, you don't own the underlying asset. So for whatever reasons, if, BlackRock or Beta shares or whatever the hell it is goes belly up, well then you lose everything, and big companies do. If you've been around long enough, I've seen, LLC was another one that went belly up, wasn't it? There's plenty of them. and and Lehman's and all the rest of them. So things happen. So because you don't own the underlying asset, that's the risk. But the world's not collapsing just yet, so we don't have to worry about that. But I just need to point things out to folks. Okay, well that's all good. We could probably pick up a few back in here as well. But let's see if we get a nice 5 waves here, and see if this all is wave 1 and 2, because the other thing here could be 1 and 2 and 1 and 2 and 1 and 2 and building to the upside. But I won't let it get away on us, because I'll pick up the trade setup on this level here anyway. Alrighty, so the next one is the US dollar index. Now, I've been using the TradingView platform for that, but I just find it a bit fickle to work with, as good as it is. So I want to use this platform. So I was kind of looking at this a little bit differently here for this. So I've gone back to my old count here just to sort of shoot the breeze a bit, but an ABC for the A wave, the B wave here, and then up for 1 here and 2 here, and then 1, 2, 3, 4, and 5 for the third wave into the fourth wave here. Now you could say that, well, Pete, that overlaps this over here, and you would be right. But I have to say, just sort of looking at it for the time being, is that it does produce such a nice wave 4 here. You know, it's a typical wave 4. This is sharp wave 2, typical sideways complicated wave 4. And then up here we've got 1 and 2 here, 1, 2, 3, 4, 5 for the third, fourth, and little 5 waves up here. So this is looking really ugly, and the size of it sort of fits this particular wave 4 here as an A, B, C, D, and E wave here for this. I probably need to have to adjust that a little bit more, but it doesn't matter. I'm not calling a top in here for this yet. So my count for this really is that we've got one more leg up here. So this would give us one more leg up into the 61.8%. And I have another count where we've got a correction here and then another move to the upside. We don't have to worry about this so far. This is corrective. The market should push up to the top up here further here. So yeah, anyway, we'll just keep working it. Once we get to this top here and it starts to turn, well, then we'll start to work it as an impulse wave or corrective wave, and it will show up either way, so it doesn't really matter. So I won't go into the bigger picture. So I'm still setting this charting program up for the dollar index, and as I mentioned, we'll try to get the yields in here as well into this video. Alrighty, I'll leave it all at that. So thanks for tuning in. Much appreciated. Cheers.